Hi everyone. So in this video, I'll be talking about why exactly is our Indian markets continuously coming off while they posted very strong Q2 numbers as well as the Q2 GDP growth was excellent, right? So what has been happening since Monday is our rupee has started declining from a level of, let's say, 87, 88. It has now crossed 90, right? So what it does is two things. One is the total returns that these foreigners make, right, on their investment in India, that kind of goes down as rupee becomes weaker. Plus the imports that we do, right, especially crude oil and gold, that becomes even more costlier. So if you look at the last month data, our trade deficit widened because we imported more and exported less, right? And also there is a thing that the Indian government may not stick to its trade deficit, right, and can breach it because our collection have been lower and we have kind of spent too much on the capex. So these two things are kind of putting a lot of pressure on the rupee, and the rupee has started to slide. Now two things: the RBI can intervene. So last time they did that, what they did was they kind of ended draining the banking system of liquidity, right? So if they do it now aggressively, chances are the banking system, which is now starting to kind of outperform, that again will go in that same loop wherein they are struggling for liquidity and these deposits are not coming in. So again, the cost of funds for them kind of increases, right? So it's kind of a little difficult situation right now, the RBI is. So let's see. Anyways, on the 5th, the RBI is going to meet and they will decide on the rate cut thing. So on that part, they'll also talk about the liquidity issue, right? So now if you look at how best to play this market is, so you would want to look at the companies that kind of came out with very strong Q2 numbers, wherein they are projecting even better growth for the coming quarters as well. Plus, companies that are kind of leaders in that segment, especially the large caps or the larger mid caps. So if you look at Nifty has kind of only fallen 1.5%, but most of the portfolios have taken a big dent, right? So this is not the time to be really experimental and buy a lot of small caps. It is time to switch to large caps, keep your money safe, make that 10, 15 or 20% kind of returns in a few quarters. And when we are in a very strong bull run and you are clearly seeing excellent earnings growth and all of that coming through, you can slowly move to mid caps and even small caps. But as of now, the large caps and the larger mid caps would be the place to be in until this whole thing settles down and then we start a new rally, right? So for Q3, the earnings are going to be very strong. The only worry for the market is that most of these ministers are highlighting that they are coming to an end on the US deal, but nothing substantial happening on the ground, right? Until and unless the market actually gets a trade deal, it is no longer going to believe what is being put out in the media, right? Because that is slowly starting to bite. Our manufacturing has kind of hit a 7-month or 14-month low in the last month, right? So manufacturing is definitely struggling. We have to kind of push it up because these 50% tariffs are starting to bite, and only if the trade deal goes through there would be some relief on the manufacturing side. So all in all, stronger rupee, right, and the manufacturing sector bouncing back, that should kind of help the market calm its nerves and start moving up from here. Until then, there is going to be some panic, some selling from the retail, because a lot of these MTFs, that is margin trading facilities, right, it had crossed a lakh crore. So if a lot of these small caps are cracking, that can actually trigger selling in even good stocks, right? Good mid and or a small cap stock, we would find selling coming in because of these MTFs being triggered, right? Hopefully this helps, and maybe by the end of this week the market should settle down.